Hello, everyone, and welcome to another episode of the Unstoppable podcast. I'm joined again today by Diana Chen, and we're going to continue our conversation about finance on the blockchain. So, Diana, thanks again, and welcome for coming on the show.
Thanks so much for having me back, Matt. I'm glad you're not sick of me yet.
We still got lots to cover. You know, this is a new space. It's a new idea, and people have a lot to digest to really get how this is going to impact them over the next several years. So let's just dive right into it. I know you have a bunch more questions for me about finance on the blockchain, and I think I'm ready.
Awesome. So, you know me, I always like to start with the very basics. So, to start, what is finance going to look like on the blockchain? Help me conceptualize this.
Yeah, so we've got a couple of things here that are going to be impacted pretty dramatically. So you're going to have banks on the blockchain. You're going to have currency swaps on the blockchain. You're going to have savings on the blockchain. You're going to have stocks. You're going to have lending. And all of these different functions are going to be significantly cheaper and automated. And I think that's what people are maybe going to miss. So just to give you a couple ideas, and we mentioned a few of these in early episodes, but when you want to change out your currency, like if you're traveling, if you want to change from dollars to euros, you're going to be able to do that now directly from your phone. And you'll probably likely do it inside an app that you already use, like PayPal. And you'll be able to go from US dollars to US dollar coins on the blockchain to euros on the blockchain. And the fees that you're going to pay on those transactions are going to be much cheaper. So in a sense, your bank is going to be on the blockchain because it's going to be able to take your Wells Fargo account or wherever you're banking can take the money from your account and then deposit that onto your address on the blockchain. It'll do the currency transaction for you. And then you can take that money that you have on the blockchain and transfer those US dollar coins into Euro coins. And then when you're in Europe, you can go around and you can spend those off of your phone. And all of that's going to be happening on the back end with computer software. You're not going to need to go to a money changer at the airport to get the currency that way. And you also don't have to go to your credit card processor when you swipe your card, who may be charging you a higher fee for making that transaction, because you'll be competing on the global market with everybody else who's swapping out those currencies instead of being held captive by your credit card company. So that was just one example, but I actually think that everything that you do in finance right now is digital, and all of those different functions have a path to move on to these blockchain crypto protocols that will make them significantly cheaper for end users and more accessible.
Got it. Okay. So when we think about finance, I mean, the first thing we always think about is banks. And I know there's this idea of a central bank when we're talking about finance on the blockchain. Can you break that down for me and just like explain how that would even work?
Okay. So when people talk about central banks and banks on the blockchain in general, well, there's a couple categories here. So there's like central bank digital currencies, and I can cover that really, really quickly. And I think that'll actually be pretty easy. And then you have traditional banks like Bank of America, Wells Fargo, Chase, anything like that. And they're going to be operating too using these blockchain protocols. And then you finally have banks that may be 100% crypto native, where they are only on the blockchain and they don't have a real physical presence. So let's take it from the top. Central banks and central bank digital currencies. I think that these are, and this is just an opinion, we'll see, but I think that these will act just like your dollars that you use today that are in your checking account. Central banks are going to move very slowly and carefully. Theoretically, it'll be a lot easier for central banks to track payments. So it should make it a lot more efficient and quicker, especially for large international deposits for businesses. And so central banks are not going to try to be super innovative. They're going to adopt the technology. They're going to have the same functionality that they have today. And they're going to just try to save on those transaction costs and the time period it takes to check up to make sure that deposits have been made. So I think that's what they're just going to use it as a back-end technology. Now let's talk about regular banks. So what about Chase Bank? What about JP Morgan? What about Goldman Sachs? What are these banks going to use cryptocurrency for? Interestingly, some of these companies have already spent significant amount of money investigating how they can use blockchain to make their business more efficient. And that's across all of their different product lines. So they're looking at it for stocks, they're looking at it for bonds, they're looking at it for currency, they're looking at it for bank lending. And So we can take each of those in turn. So for stocks and bonds, settlement is going to be a really big issue. So when you buy a stock, it actually takes several days to confirm that that is in your account, just because the backend systems are so slow. Assuming they were able to move that to a blockchain technology that could achieve consensus in a matter of minutes instead of days, now all of a sudden the banks can save a lot of money because they don't have to have all this extra money to hold these securities for the several days while it takes for them to confirm that somebody owns it. So that's stocks and bonds. The next one is currency. We kind of mentioned that earlier. Assuming that currency can be programmatic in how it's executed. In fact, most currency trading right now is high frequency trading, and it is all programmatic. So I actually am very optimistic that currency trading will just happen almost instantaneously, and it will be settled on the blockchain, and it will be super easy. We'll see at what scale that gets to, but assuming they can scale that up, I think that may be one of the first applications we see in the next year or two, actually next year, for swapping out currency. And there's going to be banks that want to participate in that because they have business customers that need to make currency swaps, and it's going to be faster and quicker and potentially cheaper for them in the long run to make these currency swaps on chain. So, and then the last one is actually much more interesting, which is lending. It's going to be a lot easier for businesses in developing countries to get loans from US banks, right? Or from large established banks in countries that have a central bank digital currency. So let's connect those dots real quick. Let's say that the Federal Reserve of the United States issued a central bank digital currency and they had dollar coins, or maybe they worked in conjunction with several of the large banks to issue dollar coins like they're already doing. Actually, I think that's the more likely path for us, at least in the short run. Now, all of a sudden, if I need to send money from the US to Argentina for a new business, then I can send it on chain in a matter of minutes. I can send it on a Sunday morning. I don't need to wait for the banks to open on Monday. And then I can track it too. So this means all of a sudden it's a lot cheaper for and easier for US banks to make those loans to those developing countries. And then simultaneously, it's a lot easier for people in those developing countries to get loans from US banks. There's a lot of regulatory uncertainty around this that needs to be figured out over the next couple of years. But I would just, if I'm projecting forward, I think the US banks are some of the most competitive banking and finance businesses on the entire planet. And if they have a way to easily move their currency around the planet so that they can make loans across all these different places and they can track it, so compliance is a lot easier for them, they're going to do it. And I think that we could end up bringing down borrowing costs for a lot of people internationally, creating more opportunities for investment in these emerging countries, which would increase overall global GDP, global productivity.
Gotcha. Yeah. So I assume that a lot of government regulations are going to have to change, and a lot of, that stuff is going to have to happen. Like, how soon do you see this becoming reality, and how much change? I mean, I've worked in government before, so I know how fast government moves, and it really just it's like snail's pace at best. So I'm just, whenever the government is involved in having to put out new laws and regulations, like, I'm just not super optimistic about timeline.
Yeah, and I agree with you. And I think that this is going to be one of the slower moving parts of the crypto evolution that we're going to see over the next 15 years. I'm hopeful that they'll want to move faster because they'll understand, or at least begin to understand, how this could actually save a lot of people a lot of money. In terms of adoption, I think we are going to see it on the consumer side, and we're going to see business pressure to solve these regulatory concerns for investing. So I'll give you an example of a recent phenomenon in the US, Robinhood, which is just had huge user growth, and they had a lot of regulatory issues they had to figure out around getting everyone a brokerage account and then allowing those people to trade that brokerage account for $5, $5 trades or something. And they, they're still working on that, but they've come a long way over the last 5 years, making sure that they hit all those regulatory requirements. So I'm actually thinking that we'll start seeing more fintech applications begin to step in to solve some of these regulatory concerns. So if you want to loan money as a US bank to an international company, maybe you make a partnership with a fintech application, and there's actually several that work out of Argentina, and you actually use that that fintech application in order to make those loans. And so that person will help you solve those regulatory uncertainty for that particular country. And then these backends are going to be built country by country, and they're going to roll out over the next 2 decades to the point where it's going to be a click of a button for you to make a loan decision, and you'll already have the compliance baked in. The other thing that's neat is once people move to digital financial transactions versus using the system that we currently have, and it is digital already, but if they move to a blockchain base, it's going to be a lot easier to verify the information. So I actually think that those types of compliance concerns are going to be easier to solve over time. They're going to be really hard at the start, and then we're going to see a steady uptick until all of a sudden it's going to feel like overnight adoption when it happens in 10 or 12 or 15 years. But really, it's going to be like a very slow grind until we start breaking through on some of these pieces.
That's true. Yeah. And I guess we've sort of already started that process, right? Without the majority of people even realizing that.
Yeah. And there's still some unlocks for crypto that need to happen, like cross-border payments hasn't really been unlocked. And I think that the most recent news about PayPal is actually very encouraging, because if you could imagine, PayPal is already in 140 countries, right? So if PayPal, they don't allow transfers yet. They allow you to buy cryptocurrency now, which is a big step forward, but they do not allow you to transfer cryptocurrency between users yet. But if PayPal, that's one application, made a step in that direction again in another year or two, where all of a sudden you can send dollars from you to a friend, right, on the PayPal app. Now, all of a sudden, we've just opened up 140 more countries, and PayPal already does all the compliance, right? And they already have, and so they're more of a fintech application than some of these other ones. But that's actually a pretty good example for how this could happen a lot quicker than people are thinking.
Gotcha. Okay. So going back to the future, 2 decades out, I say I want to open a bank account in China and in Brazil and in all of these countries. Is that something that I will be able to do in the future?
So you may not even need to open a bank account in all of those countries, because you'll be able to store digital equivalents of those currencies in your crypto wallet, right? And so now this is significantly more flexible. And instead of having to open a bank account in 3 different countries and then getting verified on 3 different sets of regulatory sets on those countries, you could actually get verified once, like have a verification attached back to your blockchain ID. And then that blockchain ID could be used across those 3 different currency types for you to hold money in those currencies inside of your account. So you may not even need that abstraction. And then you're like, well, then what is a bank, right? Well, a bank could maybe just be the wallet app that you use that makes it super easy to manage all those currencies. So your banking app in the future, you'll be able to have an account in 50 different currencies if you want. And from that one application, those will all be represented as digital currencies in your wallet. And you can invest and save from that one application across those 50 different countries if you would like. So if you're in the US and you're like, the interest rates in the US are 2%, I think, on the 10-year, I actually don't know. It's very low. And you're a retiree, like, man, I would like to make a higher interest rate. You could actually go to your phone and be like, oh, I want to save in Brazil, and the interest rate in Brazil is 6%. And you just click a button and you'll actually be able to do that right from your phone. Now, obviously, there are different risks for those different types of investment products. But right now, if you're a United States citizen and you want to make an investment to earn a return in the Brazilian real, you've got to have a brokerage account, and it's a lot more work. And so it's going to be a lot closer to Robinhood in the future, where you can just click a button and do that.
Gotcha. Okay. And then what about credit? How would that work?
Yeah. So credit. So a couple things about credit. If you are making all or substantially more of your payments with a digital payment mechanism like cryptocurrency, it's a lot easier to pull a credit profile for you, assuming you permission that person to take a look at your previous transactions. So this is for consumer credit and for businesses. It could be a lot easier to assess your credit worthiness, because they can actually see the in and out of your bank account, and they don't have to worry about it being illegitimate. So like I was saying earlier, it's going to make it a lot easier for banks to monitor the spending of business customers in other countries. So if I make a loan to somebody in Mexico and I give that loan to them in digital dollars, I can actually see on the blockchain ledger for that digital dollar every place that they spent their money at. So if I'm the loan officer in the US and I make a loan, like right now, if I make a loan in the US to a construction company, I can't see everything they spend their money on. They send me their accounting books, at the end of the year whenever we're assessing the loan to be extended. And I kind of have to trust those books a little bit. Now in the US, we have a pretty good rule of law. So it's pretty easy for me to trust that. If I'm making that same loan in another country where the rule of law may be not as good as it is here in the US, they could lie, right? And this is actually a real problem. And this is why companies struggle so hard to get listed on the US stock exchanges, because you have to certify your books to a certain standard. In the future, those types of certifying standards could be built in to the payment network itself, so that if I'm borrowing money from your US bank, you can just run a software program and go, oh yeah, this guy's good. This guy's got good revenues, and I can trust him. And then you can send me the money. And again, this is the internationalization that's going to happen from these protocols, and it's going to be a lot cheaper, because right now, if you're a good business owner in a country like Mexico, you're still thrown into that basket of more risky loans because of the country that you live in and the currency that you're borrowing against, even though that has nothing to do with your personal performance. But if you now compete on a global system where we can assess your performance based on a international cryptocurrency ledger, so that everyone's on the same playing field, you get that benefit from being an extra good borrower based at, no matter where you live. And so I think that's a significant advantage for banks.
Got it. And then as a consumer, okay, going back to the example of going to a coffee shop, buying a coffee, right? So I go there, there's a few options I can pay. I can pay with my Capital One Visa card that I have on my phone already, or I can pay with cryptocurrency. We're talking about the future. And they might say, okay, if you pay with crypto, you get a 3% discount or whatever the credit card fee is. And so paying with crypto is basically like paying with cash, and then paying with my credit card is still that'll still work the same way from a consumer perspective, right?
Yes. And so an interesting thing here that actually happened in the last maybe 3 weeks, I think it's the first credit card on the planet that simultaneously works with a dollar coin, and we'll need to check that. But I think that it was Circle announced a new credit card partnership, and I believe it was with Visa. So like, I'm very much believe in the technology itself just ending up in more and more parts of your life because it's so useful. And so we see Visa here issuing credit cards, and now their credit card is going to be able to make payments and receive payments in a cryptocurrency like a US dollar coin. So it could even be that when you check out at the coffee shop, you could pay with your phone to pay with your credit, to pay with crypto, or you could swipe your card and you could just select, I want to pay with crypto on the credit card itself to get a rebate. Like, you swipe with your credit card and it says pay with normal credit card, or you can say pay with crypto on credit card and get 1% back. Right? You see the cash back cards, or maybe it's like, pay normally and get 1% cash back, pay with crypto, get 3% cash back. And so this will actually just be part of your credit card that you have already, is what I'm trying to say. And I think so it doesn't have to be an either or, it actually can be a weird a combination of the two. And I was actually pretty excited to see Visa announce that partnership, or that collaboration, I should say, with USDC, which is a dollar coin. And I think we're going to see more things like that.
Okay, that makes a lot more sense to me, because what I was thinking is, well, I get, 2% cash back on my credit card. And so then if the coffee shop only gives me a 1.5% discount, then it still makes more sense for me to use my credit card than to use my crypto.
Yeah, but if you have a credit card that offers you 1% back if you pay normally, or 3% if you use crypto, then why not take the 3% back?
Exactly.
And I think that's, so we have a lot of this like either or fallacy instead of both with cryptocurrency. And I think that's maybe because culturally crypto came from this very libertarian, hardcore outsiders use case. And that's where the cypherpunks is where all this originated. And those guys made this technology, but as this technology rolls out to everybody, it's just going to be like a component that you interact with in all of your life, just like your phone has become a part of like almost everywhere you go now. And so it doesn't have to be nefarious or challenging even to the traditional players. It'll just be integrated into their systems. And this is why I think we're going to get adoption. And I was actually talking to Sergey, the founder of Chainlink, which is another really large crypto project in the crypto space. And we were talking about different ways we saw adoption. And I actually believe that one of the paths forward is we're going to get competition among these traditional players, right? And we just saw this happen with Visa, right? So now Visa has their very first, test credit card that also has cryptocurrency payments. And let's fast forward 2 years. Maybe they have a few more of these credit card options. Maybe MasterCard starts to make a copy of them, and maybe they start to implement some of these extra features, like when you swipe, you can choose if you want to pay with crypto and get more cash back, or if you want to pay with a regular transaction and not get as good of a discount. We'll see how this goes, but I think that the potential is definitely there. And once a few of these hooks get in there, the competitive market is going to come in, and everyone's just going to be fighting to offer these products to their end users because it's going to give them a market advantage.
Yeah, for sure. From a more practical standpoint, I'm wondering how the shift to finance on the blockchain is going to impact different socioeconomic classes. Like, would it make it easier for lower economic classes to have access to, banking and things like that? Or is it going to create a bigger barrier to entry for them?
I'm going to go out there and I'm going to say it's going to significantly lower the barrier to entry for getting financial services, and like it's going to do it a lot. And one of the things, and I should actually look this up, but the percentage of people in the U.S. who don't have a bank account right now is really high, and let's just guess a number, and we can look this up later, but it's definitely more than 10%, right? And these people just don't have any bank account at all. And what I'm saying is, to get a bank account in the future using a digital currency, it's going to be as easy as downloading an app to your phone, and that's it. You're not going to need to do any other work in order to have access to financial products. And then inside of that application, you'll be able to save, right? So people right now who don't have a bank account, how can you have a savings account? It's impossible. But if I'm telling you, getting a bank account, you'll just have to download something. And then if I want to open a savings account, I just press a button to move the money, the crypto money from the US dollar coin from my, mobile app to my savings account inside my mobile app. That's so much easier. And then we can just go down the line. So first of all, you're going to be able to get a bank account, which is a huge step up. 1/6 of the population just doesn't have one, and that's huge for them. And then the next thing is, if they want to go savings, they can just click a button. Now what happens when we get stocks traded on the blockchain, right? Boom, now I can start my first investment, and I can buy a partial share, just like you can on several apps now. And maybe I can own a little bit of Apple stock because I have an iPhone. And I'm like, oh, well, let me experiment with that. And you're going to start to be able to get this type of information, education, and access to everyone. You're no longer going to need to have a stockbroker to tell you about this. You're no longer going to need to have a banker, or you're not going to have to walk into your local store in order to do this. You can do this from your home, sitting on the couch watching Netflix. So it's going to be a lot easier. So I think it's definitely going to increase financial inclusion, which is the first really big important thing. The next one, the next one that I want to call out is transaction fees are regressive. And what I mean by that is, the more money you have, the less you care about paying a transaction fee. So if I send a wire for $100,000, I don't care about paying a $30 wire. But if I want to send a Western Union to my mom in the Philippines, and I want to send her $250 and they charge me $30, that's really expensive. It's more than 10% of what I'm sending. So because financial transaction costs are regressive, meaning the less money you have, the more you pay, then if blockchain technology can come in and drop those costs by an order of magnitude, those are going to be people who are going to be saving the most money as a percentage of their income. Now, obviously, as a total dollar amount, the people with more money are going to save more money using blockchain tech. But in terms of a percentage of their income and impact on their life, I will tell you, it's going to be just like cell phones. Like, cell phones had a larger impact on people being able to educate themselves than almost anything else on the planet, just because it made it super easy. Same thing here with finance.
Awesome. I love that. And I just Googled the numbers. In the US, 6% are unbanked and 16% are underbanked, meaning that they do have a bank account, but they also use some alternative form of financial service. So 77% are fully banked. So that's only 3/4 of Americans that have all the traditional structures of banking.
And that's here in the US, right? And like that number
Right.
that number, and like the US, although I love it here and it's a fantastic country, is only 1/20th of the world's population, if that. So yeah, no, we're nowhere close where we need to be.
For sure, for sure. Last thing, Matt, is, whenever we talk about blockchain, obviously one of the biggest concerns is with people losing their blockchain ID, their security ID, and that's impossible to retrieve. How do you see this working in the long term? Is it just going to be like whatever your blockchain ID is, that's something that you're going to commit to memory, like your social security number? Or do you see an organization coming up and storing these numbers, almost like it's like if you lose your social? I actually don't know the answer to this. If you lose your social, how do you get that? Do you know?
I actually don't, but I think you go to the post office, as crazy as that sounds.
Okay, so do you think in the long run the post office
No,
is $1
no. No. So there's a lot of different people working on making it easier to secure digital things, just in general, and overall, people's ability to be secure online is actually not good right now. But so I'll give you a couple of examples. People are working on social recovery. And people are learning to use things like LastPass for password managers. People are storing backups, and iPhone now has like the cloud backup for your keychain, which is encrypted and secure. So I think that these security solutions are going to continue to improve over the next over the future, the next 10 years, until they become second nature. And at the same time, people are going to have to learn how to do it, right? So I remember the first time my dad saw a smart lock that you open with your cell phone, he was like, "Where's the key?" Like he just like his brain just couldn't get around the fact that there was not a key to the door. And look, there's some people are going to have the same problem with securing their digital assets, their digital money, and they're going to need to be educated on how to handle it properly. And hopefully for those people, we'll also have custodians, which are starting to evolve. And this is one place where regulation could get a lot better, actually, at least in the United States, because banks just recently, like 3 months ago, they told banks that it was okay for them to custody people's digital currency, which was actually a huge step forward, because then you could see somebody like Bank of America or Wells Fargo or Chase or one of these big companies say, "Hey, store your crypto on our crypto application, and we will be your custodian for you for your your digital wallet. And that way, if you lose your keys, you can walk into our bank, show your ID, and we'll get you your money back." Right. And that's so custodial services will happen for people like my dad, who need to make sure, who are maybe much newer to these technologies, and maybe that'll be a really broad audience that will appeal to. And custodians will do this because they'll be able to make interest on the money they're holding in your account, just like a regular bank. And then for other people, we'll get better at remembering our passwords or backing them up, or maybe storing them with social recovery or certain ways like that. So that's my prediction. I think it's solvable, but you're right, it's a huge pain point.
Nice. Got it. Well, I'm excited, Matt. That was very enlightening as always. And I feel so much more educated on finance on the blockchain.
Well, Diana, thanks for the questions as usual. And then everyone else for listening, thanks again for listening to the Unstoppable podcast. We're going to do a couple more episodes like this, where we're just getting the intro here for blockchain and crypto. And then looking forward into January, we're going to start having our first guests. So again, if you have suggested guests you'd like us to have on the show, or topics you'd like us to cover, let us know, and we'll make sure to get them. Thank you.